The purpose of this video is to go through the FHA COVID transition waterfall. If you are a subscriber to the page, welcome back. If not, make sure you subscribe, like, comment on my videos. I always try to get back to everybody as soon as possible. So the first thing to understand is this information is coming as recently as 8/31/21. So today's September 2nd. This is the most current information. This is what you should be paying attention to. As a reminder, a waterfall in terms of a COVID transition means this is the order in which your lender will review you and figure out what option works best for you to transition you off of your COVID transition plan. So if you're someone who's been on one of these COVID forbearances and your forbearance has ended and it's time to transition back, you're going to be going through a waterfall. It's not as simple as just picking an option and calling your bank and saying, I choose this one. That would be kind of great and cool, but banks don't do things in ways that are most helpful for homeowners. So they're going to put you through a waterfall. The options at the top of a waterfall are always going to be the options that are most beneficial to the bank because they'll get their money paid back in the fastest time possible. And then as you kind of go down the waterfall, what gets you down the waterfall is showing the bank that those higher options are unaffordable for you. So I'm just going to tell you what the options are in that order so you kind of know what you're looking at if you have an FHA loan. So the first thing that FHA will look at if you want to transition off of your COVID forbearance plan is what they're calling a standalone partial claim. This is very similar to what we're hearing referred to as the Fannie Mae Freddie Mac deferral program. But a partial claim basically is a way for them to take the full amounts that you missed during your forbearance. So if you were on a forbearance for 6 months and you missed 6 months worth of payments, you have like a lump sum, which is an addition of all 6 months of those payments. They take that and they kind of record on title what looks like a subordinate lien or it looks like a subordinate mortgage, but they basically just put this lump sum at the end of your loan so that you don't have to pay anything toward it now. And then you resume making your regular mortgage payments every month, and that amount gets dealt with at the maturity date of the loan or if you were to sell or refinance your house. So the partial claim is basically for people who have fully recovered from COVID. They don't have any issues making their regular mortgage payment. They just don't want to deal with this full-blown kind of like 6 months of hanging out there at the beginning of their regular mortgage payments. So once again, they'll take the amount, they'll kind of make it due at the maturity date. It'll look on title like a subordinate mortgage, and that's what a partial claim is, and that is what FHA is currently reviewing first. After a partial claim, they'll go to what they're calling a recovery modification. And that is explained by FHA as for people who cannot afford to necessarily resume their exact regular payment that they could pay before their COVID forbearance. And so the modification will consider things like interest rate reductions, extended terms, and potentially a small amount of reduction in principal in order to get you to kind of a more affordable payment. When you hear FHA representatives talk about it, they throw around the phrase lower payments, lower payment, lower payment. I don't want you guys as borrowers to get too excited about there, thinking that like if you go through a recovery modification, your payment is going to be like slashed in half. You may get a better interest rate, which is good, and your payment may drop. But the drops I'm seeing are like $300, $400 a month, which is helpful, no doubt. But it's not going to be this like dramatic reduction in payment. But they will write you a new modification. A modification is different from a partial claim in that it is like a new loan. You have a new principal balance, a new maturity date, a new interest rate, and you kind of have that whole document recorded and you start fresh making your payments. The other thing that FHA wants to make clear is that they are doing everything they can to streamline the process. And what they mean by that is there should be very little, if any, documents requested to get through these options. Now, I actually do this work every day, and servicers are implementing these no documents rules very weirdly. And so I do have some clients where the bank is refusing to move forward in some way without a particular document. And so you might want to consult with someone in your state if suddenly your servicer is requesting a ton of documents. But the guidelines say that it should be streamlined, meaning you should be able to call, you should be able to talk to someone, you should be able to get onto one of these plans and follow the waterfall without having to submit a ton of documents. Good luck.